Liebe Zuschauer, herzlich willkommen zu Inside Wall Street vom Parkett der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist heute Peter Cardillo of Rockwell Global Capital. Thank you so much for joining us.
Good to be back.
Peter, we are in the middle of the earnings season, and last week, Friday and Thursday, we saw the tech giants, Google, Microsoft, disappointing, but still with good numbers, but Wall Street is disappointed.
No, I think it's, so far so good, and as of yesterday, there were around 81 S&P 500 stocks that had already reported, and as a result of that, 85 to 90% beat estimates. Now, of course, there's a little bit of a disappointment in terms of revenue growth, but by and large, it's going to be another good earnings season, probably close to maybe 4.5%, 5% versus last year at this time. So all in all, the earnings season is good.
So we saw the bank sector beating the estimates, expectations. We saw the tech giants not beating them. Do you see anything special there?
No, I mean, you're going to have sectors that are not going to perform well, and obviously that's due to the slow economic growth environment. And of course, I guess the quality of earnings might be questionable, but nevertheless, corporate America continues to earn money in tough times.
The Dow Jones also increased again last week, all over the week. Do you think we see the markets increasing again, new all-time highs maybe?
I think so. I think we're in the midst of a summer rally, and of course, Mr. Bernanke did his part again in trying to calm the markets, and so far he's been successful. And of course, there is no time frame in terms of when he's going to reduce the stimulants, and of course he's again repeated not once but many of times that low interest rates are going to be here for the foreseeable future. So that's the key. And of course, with corporate America continuing to show earnings growth, inflation under control, the market is going to move higher. And I think the only game in town is the stock market.
Do you see a tapering of the Fed this year coming?
Not this year. We'll probably see the Fed make an announcement in November, possibly sometime in the first quarter of 2014. By then, perhaps unemployment will probably be closer to maybe 7.25%, and I think that's when the Feds probably will begin to taper off.
And then we are going down from 85 billion to maybe 70, 65, something like that in the beginning?
It all depends on the economic data, and it all depends on consumer spending, which I see basically being confined to slower growth in the months ahead, and that's due to rising oil prices, which are beginning to show up, and that's going to obviously impact disposable income. So lower consumer spending probably means that the Fed is going to perhaps trim to about 45 to 50 billion.
You already mentioned that we are in a summer rally at the moment. This is like against the statistics. Normally we would see a little pullback in the summer, and then we see a new market going up in autumn and in the winter time. So is there anything special? Is it just Bernanke, or what are we seeing?
No, it's going to be earnings and the fact that the economic data continues to be mixed, I think that's what's going to drive stocks higher. Now, that doesn't mean that we're not going to get some sort of a pullback during the summer, but basically the summer rally will be confined to this 1 to 3% trading range with a higher trading range in sight.
In the upcoming week, we see, again, many companies reporting their numbers. Apple, Facebook, again, tech stocks. Do you expect, again, like disappointing numbers?
Again, I think there'll be some companies that will disappoint, and there will be others that will continue to beat lower estimates. So I'm not looking for any major disruptions in the earnings season.
for Apple, always they have to beat the expectations so high that the stocks are going up. Do you think they can beat them?
Well, I'm not, in tone to speak for Apple, obviously, but again, the market's expectations are what the market will be looking at.
So in the end of the next 1-2 weeks, do you think we are going higher here?
I think we probably could see a slight pullback. Next week we have a light economic calendar. Most of the economic data revolves around the housing sector, durable goods. So there's a possibility with earnings in full force that we could see a little bit of a pullback and then continue to march upward.
Peter Cardillo of Rockwell Global Capital, thank you so much for joining us. I appreciate your time. Und Ihnen, liebe Zuschauer, vielen Dank fürs Zuschauen. Wir sehen uns bald wieder hier vom Floor der New York Stock Exchange. Mehr Informationen finden Sie auf unserer Webseite www.drf.fm.